What's up traders? In this video, I'll be performing a market forecast on EUR/USD. So stay tuned. Before we dive into today's video, I just want to take a quick second to let you guys know that I have officially converted the Camelthorn FX trading plan into a one-time downloadable PDF, which is now available in my Patreon shop. This trading plan outlines the exact framework which I personally use to trade the financial markets with clarity, consistency, and confidence. This framework not only allows me to establish a directional bias for a particular trading day, but it also allows me to identify potentially high probability areas to trade from. So feel free to hit the first link in the description down below to check it out for yourself. Now, this market forecast video is going to serve as my outlook for EUR/USD for the month of June 2025. We're going to be looking at the weekly, daily, and 4-hour time frames to give you guys a medium to long-term view of what I believe is likely to happen next on this pair. The reason for creating these videos is to show you guys in real time on a month-to-month basis how I follow a particular pair and how I identify potential areas to trade from based off of my trading approach. Now, as always, we're going to be kicking things off here on the weekly time frame, but I'm not going to be spending too much time on this time frame because in truth, not an awful lot has changed since our last market forecast video at the start of May. We still have price action trading within this large bearish weekly external range. Our internal structure is still pointing bullish after we saw this period of consolidation around the EQ of our bearish external range. And the overall objective for this time frame still remains a violation of our weekly weak low all the way down here. Now, price action is coming off of this recent mitigation of weekly supply, which is well priced within our bearish weekly external range. During our last market forecast video, we were anticipating that the bearish reaction to this weekly supply could potentially help facilitate the start of our weekly internal pullback phase, which would in turn allow us to establish our new bullish weekly internal range. However, that has not occurred yet, and this is the reason why I do not have my new weekly internal weak high marked out just yet. That is going to make a lot more sense in a minute when we drop down to our daily time frame. But specifically going into the month of June, here on the weekly time frame, what we're seeing is that our internal structure is pointing bullish, which is facilitating a resumption of our weekly pullback phase. The very first thing that we want to see is the establishment of our bullish weekly internal range. Once we have that internal range established, we would then be looking for the internal pullback to potentially target this weekly demand zone here. The reason this weekly demand zone stands out specifically is because of the large imbalance that sits above the POI and this liquidity pool that sits above the imbalance as well. A mitigation of this weekly demand zone would then have the potential of facilitating a resumption of our weekly pullback phase, possibly up towards our weekly supply zone, which sits all the way at the extreme. This weekly supply zone is effectively the last POI where our bearish weekly continuation phase can originate from. I really like this extreme weekly supply zone because we had a sweep of liquidity prior to the POI forming, combined with the fact that we have a liquidity pool and imbalance that sits just below the POI as well. There is the possibility that from where price action is now, we just see a resumption of this bullish pressure to push price towards that extreme supply zone before our new bullish internal range is established. And if that were to occur, initially then, we would be anticipating the internal pullback to potentially originate from this weekly supply zone. Now, I definitely do not want to disregard the mitigation of this weekly supply zone because it is a well-priced POI within our bearish external range. And this initial bearish reaction does have potential to evolve into our bearish weekly continuation phase. The start of that, however, will only truly be signaled by our internal structure shifting bearish, which at this current moment in time will entail a violation of this internal strong low. Now, we're obviously not going to be making any trading decisions on our 15-minute time frame, our main execution time frame, based specifically and solely on this weekly time frame analysis. But it's always good to know where price action is bigger picture and the direction is pointing in overall. From our weekly time frame, we can now drop down to our daily time frame, which I regard as the internal of my weekly. And we can see here that my daily time frame is currently pointing bullish. My last major daily external break of structure is a bullish break of structure in here. We have internal structure that is trading bullish as it is facilitating the impulsive phase that generated that daily external break of structure, and the mitigation of that well-priced weekly supply zone facilitated our internal pullback phase. Our most recent internal range is a bullish one, as denoted here. We saw that our internal pullback came in to interact with this daily demand flip zone, which we identified during our last market forecast video. And the mitigation of that daily POI generated a nice strong bullish reaction, which at this current moment in time is now facilitating the internal continuation phase. You'll notice as well that my daily strong low is all the way down here, as this is the starting point of my impulsive phase, but I have yet to establish my new daily external week high. And the reason for this is because my internal structure is still pointing bullish. Remember, the start of my daily pullback phase will be signaled by my internal structure shifting from one market state to another market state. In this example, from a bullish market state to a bearish market state. So because my internal structure is still pointing bullish, price action is still trading within this impulsive phase. And so any buys that we take at this current moment in time is effectively going to entail us trading in line with the bullish daily impulsive phase. So my daily time frame is bullish, and the current objective of price action is a violation of the daily internal week high. If we see price action reversing from where it is now to violate our internal strong low, that will signal the start of our daily pullback phase, and it will allow for the establishment of our new daily external week high and our new daily external swing point. Because of the strong bullish reaction that we got from this daily demand mitigation, however, we do have the option of applying the FTC model here if price action were to violate this low. If you think about it, this low would have failed to create a new internal higher high. And so that would allow us to identify a shift in internal structure from bullish to bearish just a little bit sooner than this internal strong low. Now, if our internal structure shifts bearish to facilitate the start of our daily pullback phase, then this weekly demand zone would be our main sell target for our daily pullback phase. And this would be the main area where we would be anticipating the bullish daily continuation phase to originate from to potentially target our daily week high. This area is said to be well priced within our bullish daily external range whenever it is formed, and therefore it would be a potentially high probability area for us to keep an eye on. And then finally, we can drop down to the 4-hour time frame, which I regard as the internal of my daily time frame. Now, the 4-hour time frame is the main time frame that I get my directional bias from for a particular trading day. The daily and the weekly time frame give me the overall bigger picture of where price action is and where it is likely to go in the long term. But my 4-hour time frame is really the time frame that I focus on day to day, as I utilize the directional bias from my 4-hour time frame to determine where to buy and where to sell on my 15-minute time frame. Essentially, what you want to be doing is you want to establish whether you are trading a 4-hour impulse a 4-hour pullback or a 4-hour continuation phase. Because once you know which phase you're trading within, you can then look for trading opportunities that are in line with that particular trading phase on your 15-minute time frame. Now, my 4-hour time frame is bullish, and the overall objective is a violation of the 4-hour week high. Now, you'll notice as well that based on how I have my analysis drawn out, my internal strong low coincides with my external strong low, and then also my internal week high coincides with my external week high. Now, this means that my 4-hour external structure currently coincides with my 4-hour internal structure. And this can be directly attributed to these two periods of strong bullish pressure which entered the market during the month of April. What these two periods of high volume bullish pressure did is it effectively expanded my internal structure. And that resulted in me establishing my bullish external range here using the 40 to 50% retracement rule. Now, the rule surrounding where and when to use the 40 to 50% retracement rule is outlined and explained in the Camelthorn FX trading plan. And I also have multiple exclusive videos on my Patreon explaining this particular rule in detail. So definitely feel free to check those resources out if you'd like to learn a little bit more. But essentially what the 40 to 50% retracement rule allows is for the establishment of manageable external structural ranges like this. So the mitigation of weekly supply in here facilitated our 4-hour pullback phase down into daily demand here. After the mitigation of daily demand, we had our structure that was facilitating the pullback shift from a bearish market state to a bullish market state here. And once that structure shifted bullish, which in this particular scenario I refer to as microstructure because my internal and external structure overlap, once that structure shifted bullish, that signaled the potential end of our pullback phase and the start of our next continuation phase, which could now be looking to target the week high. However, this structure did shift bearish once again towards the end of May after it violated this 4-hour demand zone. And at the time of recording this video, we effectively have this bearish microstructure range here based off of this bearish micro break to the downside. So effectively we have a micro strong high here and we have a micro weak low here. If we take a minute to just quickly understand what this could potentially mean for price action going into the start of June, what we know is that we have this 4-hour demand zone that is effectively chaining off of this larger daily demand. If we are to see a resumption of this bearishness and a new bearish micro breaker structure here, this would become the next main area of interest where we could potentially be seeing a resumption of that bullish 4-hour continuation phase, which will be looking to target the 4-hour week high. With respect to this particular bearish structural range here, we can see that price action came in to interact with this 4-hour supply zone and it generated an initial bearish reaction. So right now we are effectively in a little bit of a crossroads here in terms of this bearish structural range, because we have seen a bearish reaction to well-priced 4-hour supply again in terms of this bearish range. And because of the fact that the current objective of this micro range is a violation of this week low, we could potentially be seeing the introduction of more bearishness from this area to potentially target this week low. Based off of that explanation, going into the first week or so of June 2025, on our execution timeframes, we can be on the lookout for potential selling opportunities in here. And the reason you'd be looking for potential selling opportunities in here is because there is the potential that price action potentially trades lower to target this 4-hour demand zone. However, it is important to take note of the fact that we have seen the mitigation of a well-priced higher time frame POI within this bullish external range. We have seen the start of our bullish continuation phase, and at this current moment in time, even though this structure has shifted bearish, the overall objective is a violation of this weak high. That means that taking sells in this area is going to carry slightly increased risk because of the fact that price action is coming off of this demand mitigation. The second thing that I want to bring to your attention as well with regards to this bearish range, there is the possibility that this was just a temporary structure shift in order to facilitate a liquidation of this area here, because we can see that after price action swept this low, we had a very strong bullish reaction. Now, obviously, that bullish reaction facilitated this micro pullback, but it could also be the catalyst that price action needs to continue with this continuation phase to target the weak high. So whenever you're faced with scenarios like this where there seems to be conflicting information from your execution time frame and the time frame where you are getting your overall directional bias from for the trading day, always place a little bit more emphasis on your higher time frame where you get your directional bias from. And so in this scenario, if you are unsure about taking sells, but you do believe that price action could trade down lower, instead of trading from this area, wait for another bearish break or structure to the downside and look to see if you can get a potential entry to continue trading down lower. Doing this will allow you to offset some of the risk associated with trading sells in here based off of this recent daily demand mitigation. And if you're looking out for buying opportunities to target this weak high, what you would then be waiting for is a violation of this strong high level to signal the resumption of your continuation phase so that you can then look for potential buying opportunities to trade in line with that. And this is why it's very important to have a very clearly defined method for establishing a directional bias and then also for identifying potential POIs to trade from, because price action in the market is constantly throwing curveballs and you want to equip yourself as best as you can to avoid falling into some of the traps that the market likes to set. So very interesting price action that's currently printing here on EUR/USD. I'm personally going to be waiting for this area to be violated before I look for potential buying opportunities, purely because my underlying directional bias is bullish. But I know exactly what I need to do if I see another bearish break or structure to the downside in this area. So feel free to add EUR/USD to your watch list. It does look like there could potentially be some really nice opportunities for the month of June and for the remainder of this year, just in general. If you guys found this video helpful, informative, or entertaining in any way, shape, or form, please make sure that you hit that like button, subscribe to the channel so you don't miss out on any future content. And as always, I appreciate you guys so much for watching. Speak to you in the next one.